President-elect Trump kicks off his second term on Monday, and he reportedly has more than 100 executive orders planned for day one in office. From immigration and tariffs to climate and energy, the incoming president is pushing forward his agenda fast and hard. Joining me now, Pimco head of U.S. Public Policy, Libby Cantrill. Libby, thanks for coming by.
Thanks so much for having me.
It's busy season for you.
It is very busy, yes.
So President-elect Trump becomes President Trump on Monday. You'll be watching carefully. What are the biggest moves you think will happen on that day one surge? Yeah,
so just as you previewed, we are expecting really a surge of executive orders. If 2017 were any indication, he announced, several overarching executive orders on day one back then, and we're sort of expecting him to do the same. I do think it's going to be around those areas that you just outlined on environmental sort of energy regulation, the sort of drill baby drill, rolling back some of the things that President Biden has done as it relates to the LNG export pause, prohibiting drilling on federal lands and what have you. I think he will also have a series of executive orders on immigration and on the southern border in particular. Now, some of the things, the bigger things like a broader deportation program, he'll need Congress, he'll need funds from Congress. But in terms of really slowing the flow of migrants over the southern border, he can do that unilaterally. And the last thing is going to be on tariffs. And I think that's the thing that the market is really worried about is what is likely to happen on tariffs day one, but then over the course of his first year. And again, that's, I think, what you could see. If you see any market reactions on Tuesday, it will be because of what he did or did not announce on tariffs.
So as you said, immigration will take a little while, so that probably doesn't have an immediate economic impact. Do you think, can he do anything on tariffs that will have an immediate impact?
Yeah, I mean, so again, it depends on really the scope of what he announces. I mean, I think the lowest hanging fruit, just from a legal perspective, is that he can increase tariffs on China. We already have tariffs on about $300 billion of products from China. I think you could easily see him increasing those. Does that actually have a really big economic impact? Probably not. The bigger one, and I think it's a real open question of whether he does this day one or he does it at all, is this sort of idea of a universal tariff, putting a 10% tariff on all countries, on all products. Now, that would probably be inflationary because you don't have the sort of substitution effect. Some of it would depend on how currencies react and what have you. But again, I think that's less likely just because I think that legally that has more questions around it.
And if there were retaliation, presumably that could be inflationary as well.
It can be inflationary and also could hurt growth. I mean, I think this is the thing about tariffs in their extreme. If they're not sort of sequenced, and I think one thing that we could see on day one is his previewing, kind of providing forward guidance, if you will, kind of in Fed speak around tariffs. And so sort of saying that he's going to increase tariffs on a particular country at a particular time if they don't provide some concessions.
You didn't mention tax cuts because that's not really a day one thing, but we know they're on the agenda, presumably extending the tax cuts from Trump 1. What could be different?
Yeah, so as you know, anything that's sort of regarding spending or tax cuts has to go through the U.S. Congress. So it will not be day one. It will be the first year. The end of 2025 is when those Trump tax cuts expire. I think our messaging to clients is that we will see a full extension of all of those individual Trump tax cuts. Really, the question is for how long? Is it for 4 years? Is it for 10 years? Are they permanent? I think that is actually on the table as well. That could be costly, could impact the deficit, but the markets would likely react positively to that. I think the big question, though, to your question about what is different is what additional tax cuts we could actually see. I do think that we will see some sort of compromise on the SALT, the state and local tax deduction. Right now, there's a $10,000 cap. I think that could increase to $20,000, maybe $30,000.
New York, California,
for people in New York, and California, we all would love that. And then some additional, like no taxes on tips. And now that's going to be, I think, tailored to specific industries. So people at Barron's or Pimco cannot just be paid in tips.
So I thought that was just political. A lot of people did. Do you think he could really do that?
And I think he will do it.
Okay.
And I think there's a lot of actually political will to do it on the Republican side. So I think there will be some additional tax cuts. I think the last thing I will just say from an economic perspective is an extension, a continuation of policy doesn't really move the needle in terms of new fiscal stimulus, but because you could see those additional new incremental tax cuts, that actually may, again, sort of provide an upward boost to growth.
We're almost out of time, but real quick, what are the biggest investment implications here? Presumably possibly at the end of the yield curve?
Yeah, I
Long
think
end?
for our view has been going into the election and coming out of the election. It's sort of a steeper yield curve, meaning kind of more yield at the long end. Yeah. I think that may be a little bit less compelling now, given that inflation is coming down, so you're going to start seeing yields come down as well. I think really volatility is going to be the theme now for active managers.
Donald Trump volatility? No way.
No, and again, there's some good and there's some bad. I think it's again a question of scope and sequencing, and then of course how markets react.
Got it. Okay, Libby Cantrill, thanks so much.
Thanks so much. Appreciate it.